Good afternoon, students. I say Happy New Year to you all. It had really been a while I come online. So sorry, I've been very busy. So, for those that have been calling me, that how far, what happened, we've not heard from you. I'm fine. It's just that the work and the time. So, thank you very much for your call and thank you very much for checking up on me. So, today I'm back to my normal business. I'll be doing a short video on a topic that students have been requesting for. So I'll be looking at financial accounting. Financial accounting. And under this financial accounting, I'll be taking a new topic, a topic that students are always scared of. And what is that topic? I'll be taking what is known as what? Insurance claim and consequential loss. Insurance claim and what? Consequential loss. When you talk about insurance claim, it's different from the normal insurance account that we normally prepare, which is you have to prepare statement of comprehensive income, statement of retained earning and financial position. But this time we are looking at the amount claimable by a company, the amount claimable that insurance firm has to pay what? The company for those damages. What are those damages? Because the future is uncertain. Anything can happen to your business. Anything can happen to whatever things you are doing. You can have fire breakdown. You can have um, 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 pandemic or anything that is beyond your control. Those external forces like the government policy and so on that can bring down your business. So once that business is affected, the percentage or the amount that will be claimable by the company, which the insurance company has to do what? Pay those companies. So, and what are those things? We are going to look at the amount claimable on the turnover, the amount claimable on the gross turnover, with the amount claimable with average clause. Do you get it? Now, if you are talking about insurance claim, you must understand that there must be a financial statement for a certain period. You need two turnovers to make up your claim. Number one, the first turnover is before the period of disruption. The second turnover is the turnover in the actual period of disruption. What are the steps you need to calculate? What are those things you need to know? What are those fundamental things you need to understand before solving any question on insurance claim? Number one, the first thing you need to identify, you must identify the period of indemnity. Period of indemnity is very important. This period of indemnity is always given in the beginning of the question. You can either see it in the prologue of the question or at the introduction of the question. You will see it there. It will be stated there with the policy amount. Then number two, you have to identify the period of disruption. What is period of disruption? Period of disruption is the time frame that the incident occur, the time frame that fire occur in the business, the period the incident occur from the beginning to the end of that period. You must identify it. So once you identify that, you are good to go. The next thing is to identify the GP percentage. GP percentage is not always given, but once you have your gross profit, once you have your gross turnover, you can be able to calculate your GP percentage using this formula, which is the net profit plus insured standing charge all over turnover times 100 all over 1. Then number four, what is the next thing there? If you have improvement cost, as a result of the claim, improvement can come in form of a fractions. It can come in form of a percentage. But irrespective of how the question comes, either fraction or percentage, it follows the same rules. If you have 1 all over 10, it is same as 0.1. Sorry, it's same as 10%. So just apply improvement cost on GP percentage or on turnover. You can have a separate percentage for turnover, you can have a separate percentage for GP percentage. So it all depends on how the examiner wants to put the question. But once you have those things in your mind, the rest is you are good to go. So improvement cost. Note, improvement cost will be added to GP percentage or turnover. Number 5, you calculate the corresponding turnover before the period of disruption. Now look at the board. What is corresponding turnover? If I have a if fire occur on 1/4/2000 to 31/8/2000, look at it, that this is April to August, April, May, June, July, August. This is 5 months. So my corresponding turnover before the period of discussion is going to be what? 1/4/99. Okay, let me make this one to 2001. 2001. So my corresponding turnover is going to be what? 1/4/2000 to 31/8/2000. Do you see it now? That is my corresponding turnover before the period of disruption. Fire occur April 2001 to 31/8/2001. Then my corresponding turnover that corresponds to that period is going to be what? 1/4/2000 to 31/8/2000. Do you get it now? Then number 6. So once I have my corresponding turnover, I can add my improvement cost on my corresponding turnover. Then number 6, I have the actual turnover. My actual turnover, it is the turnover that occur in the period of incident. Now look at this now. My actual turnover fire occur 1/4/2001 to 31/8/2001. So this period is known as my actual turnover. Do you get it now? My actual turnover, it is the turnover in the period of incident. So number 7, my GP, my gross profit loss. My gross profit loss is the difference between my corresponding turnover and my actual turnover. If my corresponding turnover here is 20 naira, and after adding my improvement cost, I have 5 naira, this is giving 25, and my actual turnover is 10 naira here. So my gross profit loss is what? 15 naira. Do you get it now? So once I have my gross profit loss as 15 naira, then the last step, I will now calculate my GP percentage on turnover loss. Whatever I get is now what the amount claimable by me before average or before working capital, before I will take the lower of what? Working capital. This stage is the first stage. How do you calculate your turnover loss? These are the first step you calculate your turnover loss. Then in my next video, I will take you to a stage whereby you have to calculate the total claimable, total amount claimable with average clause. That is when we start looking at the lower of working capital, lower of improvement cost, lower of standard turnover. We are going to look at all those things. Then if there is savings and average clause. So at this point, these are the fundamental things you need to understand. First, learn how to calculate the turnover loss. So these are all the basic steps you need to calculate the turnover loss. So my next video, I will take a question whereby we can calculate turnover loss with the figures. So this is just a comprehensive format. Practice this, and if you are yet to subscribe, kindly do so that you'll be first to notify once I drop a new video. Thank you, and God bless you.